Joining us from Cape Town now is Seed Investments Portfolio Manager Mike Browne. Mike, thanks for your time. Just looking at the Seed Flexible Fund launched in June 2010, almost a year and a half old at this stage. Let's focus on asset allocation and where you have the most prominence at the moment across equities, cash, bonds, and of course, property.
Hi, Bronwyn. Well, our biggest call at the moment is into offshore stocks. We've had for the last year or so quite a big overweight there.
And are you going to maintain that overweight position on the offshore side? And where specifically, Mike, are we talking about your exposure in the offshore environment?
Well, towards the end of last year, we increased the weighting to equity on an offshore basis, and particularly to high quality global stocks. We just see that there's a lot more value in these stocks, and with sort of less volatile earnings and exposure to emerging markets, we think that's where the value is at the moment.
Now, I'm with you on that, and I see that you've gone virtually full weighting, almost up to your 25%. You're in global Orbis. How they performed?
Over the last 3 years, they have, since the bottom of the market, they've done nicely. Not quite as good as their 7% alpha that they've had since 1990 when they launched. But in fact, we're in the process of moving a portion of that away from Orbis, more specifically into a unit trust, the Invested Global Franchise Fund, that focuses purely on high quality global stocks.
In your fact sheet, you make mention of your local fund manager selection, and specifically Cannon Asset Managers from a deep value perspective. Can you elaborate on that choice?
Well, as a house, we do believe in the valuation principles, and obviously Adrian Saville at Cannon is as everyone knows, he's a deep disciple of deep value. It hasn't paid off as well as we'd hope over the last year or so, but we all know that investing in the value style does sometimes play out over longer periods. So we hopefully it'll turn sometime.
You've listed a few individual stocks here. Is that part of? Do you buy individual shares as well, or are you only fund of funds?
Well, yeah, we've got seg mandates set up with Atlantic and with Cannon, so that's just on a see-through basis to the shares that the Cannon guys will be buying.
Looking at Anglo American, one of the top holdings from an equity perspective, at around about 6%. Again, the stance on Anglo American and why Anglo American over BHP Billiton?
Well, as I said, yeah, that's Adrian Saville's choice at Cannon. We outsourced that function to him, but just having chatted to him, it does offer a very cheap entry into the resource market, with a PE in the low or sort of high single digits, and coming from skipping a dividend a couple of years ago, starting to pay a dividend, we think that maybe the market just underprices it slightly.
Well, this is the first that Adrian Saville, a value investor, thinks that resource shares are cheap. I think it's a time to celebrate.
There are a number of value managers out there. Mr. Shapiro,
I'm starting to worry now because I like resources.
Mike, he's got some selected resources. Yeah.
Mike, let's come back to your overall asset allocation and bonds at the moment. Your stance on local bonds?
Well, we're not, obviously South Africa, we're at sort of historical lows in terms of interest rates. We know that bonds typically don't do well in an increasing inflation, increasing interest rate environment. Again, that's allocation is left to Arno Lawrence and his team at Atlantic Asset Management, and their preference there is into money markets linked instruments that are linked to the JIBAR rate. So as rates go up, the floating rate notes will increase the yield, and they're also taking tactical positions into bonds when the prices warrant.
I see that's pretty high. That's as high as about 16% that you are in on the short side of it. Do you have to go in? Are you governed by Regulation 28 or regulations like this? Are you completely open as to where you can go on asset allocation?
Yes. No, the fund is Regulation 28 compliant, so it's available for all retirement investments. Internally, we have our own mandate limits for maximum and minimums into the different asset classes, and our valuation models will help decide on which asset classes to underweight and overweight.
I don't know if you heard the previous interview with Keelan from Stanley, but he's quite bullish on properties, particular capital, which I see as your biggest property investment. If interest rates go down, which the forward markets are suggesting, would you increase property exposure, or you're still nervous of that sector?
Well, yeah, we are slightly underweight on the property side. We have been since the launch of the fund to the detriment slightly. We continually looking at the valuations, property being a semi-hybrid asset. It's got your bond-like characteristics of a regular high yield, and it's got your equity market characteristics of the capital volatility. So we've always just got to try and look at the value between the different asset classes, local equity, bonds and property. And should the valuations warrant an increase in the local property, we'll be very happy to do that. But again, if they run ahead of themselves, we will look to cut back.
Mike, thank you very much for your time. Mike Browne from Seed Investments, and of course, thank you very much to David Shapiro. Just a quick one from one of our viewers this evening. Going back to the Optimum coal story, Glencore, did they buy those shares in the 14% in the open market?
It appears so. I think they bought it from an existing holding, so it was a negotiated deal. But that, I'm not sure which market it would go through, but and I think they did buy some from on the open market.
On the open market.